there are some negative effects that lowering interest rates has as well. The inventory issue never got fixed. Prices never went down when it came to houses. All of the issues that have been there before rates were up are still there. Some of them even worse. He is one of the more hawkish members. He wants the tight policy. The Federal Reserve, they don't really care about this. This isn't their problem. Federal Reserve Governor Christopher Waller recently went on record saying that interest rate cuts are right around the corner, barring any unexpected data from unemployment or inflation. Now, interest rate cuts are pretty much penciled in at this point. Markets have already priced them in, but in this video, we're going to discuss why you have to be very cautious when it comes to dropping rates, because it is going to change everything. But before we continue, let me just say that if you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me. Christopher Waller is one of the governors of the Federal Reserve. His background is in economics. He was nominated for the board in 2020 and his term will go till about 2030. Now, in a recent interview, he laid out 3 scenarios that could play out for the rest of this year. Scenario number 1, that data comes in so good that they start to cut rates immediately. Scenario number 2, the data is up and down. Some things are good, some things not as good, and interest rate cuts happen later in the year. Scenario number 3, inflation takes a turn for the worse. Inflation starts to go up again, and this talk about interest rate cuts just goes out the window, and they have to start fighting inflation again, either raising rates or keeping them where they are. Now, he did say the scenario number 3 is the most unlikely, but being that we have such a complex, dynamic economy, he had to lay out every scenario and basically let people know that any of these scenarios can happen. He did say scenario number 2 is probably the most likely, and mentioned that September date for rate cuts is probably what's going to happen based on the data that we're seeing right now. Now, it's interesting to get these comments from Chris Waller because he is one of the more hawkish members. He wants the tight policy. He wants things to be, he's very hawkish compared to some other members on the board. So for him to come out and say, yes, we're probably going to cut rates soon, and yes, it's going to happen around this time, you can kind of go from penciling it in to writing it in pen when somebody like him makes these type of comments. Now, while most people are warm to the idea of interest rates going down and see it as a good thing, there are some negative effects that lowering interest rates has as well. Now, for an example, I spoke to a realtor friend of mine recently, and he told me that he was getting so many calls recently from old customers that he had, calling him basically asking about interest rates. Hey, I'm seeing in the news rates are about to start dropping. What do mortgage rates look like right now? I think we're ready to start buying again. Now, the reason why that's a problem is because the inventory issue never got fixed. Prices never went down when it came to houses. All of the issues that have been there before rates were up are still there, some of them even worse. And you got to think, a lot of people just kind of went to the side. They didn't want to have the 6-7% interest rates when they saw people get 2 and 3% interest rates. Some of those people just saved money. Some of them didn't really save, and they just, when the time comes, they will get back into the game. Well, if you have a whole bunch of people just get back in at the same time with that same lack of inventory, you can expect prices to only continue to rise. And, for first-time home buyers or people that are looking to upgrade and move around, it's just going to be more and more difficult as interest rates go down. Unless you address these different issues. And in all honesty, the Federal Reserve, they don't really care about this. This isn't their problem. They look at the economy on a macro level, on the big scale. So how this affects people's ability to buy homes isn't really what they're looking at. They look at, do people have jobs? What is overall inflation? Different charts, and can you or me afford to buy our next house? That isn't really something that they care about. But for a lot of people, when interest rates start to drop, you are going to have a whole bunch of people try to flood the market again and buy houses. You're going to have bidding wars happen again. We are going to see prices continue to go up. And the reason why it's an issue is because they never went down in the first place. They went up, up, up. They might have coasted for a little while. Well, you're going to start to see them go up again, that you never saw that down. Well, I'm just going to wait for prices to go down. When prices go down, it never happened. And now people are going to try to get back in it. I just want people, the idea of home ownership and owning your own land and having your own house. You could build wealth that way, equity, and it's a beautiful thing that you wish for all people, but just know that it's gonna get harder because of Fed policy. And we have to understand that interest rates are still at relatively historic lows. These are still relatively low rates. I've talked to so many people that have told me stories of, they used to have CDs back in the day where the APY was 10 to 15%. I've known some wealthy people that literally they worked, but they financed their whole life based off of the interest that they got on CDs. And just a completely different world that we lived in. Today, there is so much debt out there. There is government debt, corporate debt, consumers, everything. So much more money going around that 100 to 200 basis points makes a huge difference. If you drop 200 basis points over a period of time, you are going to have so many businesses look to get loans because of that. It is going to drive the economy. You're going to have businesses investing in themselves. You'll probably get more jobs, more high-paying jobs. Interest rate cuts are going to do some good things for the economy, but it's not all peaches and cream. And I keep going back to that housing market as something that you have to look out for. If you own your house, you got a low rate and you're satisfied, that is great. But just know, in this country, there is so many people that want to own houses that just can't. And the prospect is going to get harder, possibly starting in September. Probably starting in September when these rates start to go down. If you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me.